What's going on, everyone? The market basically collapsed today. The NASDAQ, the SPY, the entire stock market really fell. You can see the NASDAQ is now trading outside of the lower level of the B band. Almost exactly what happened last week, but this looks much more bearish. So in today's video, we're going to talk a bit more about what this truly means for the stock market moving forward. We're going to talk about the bonds and how much they influence the stock market. And of course, we're going to talk about the crypto markets. So without further ado, I hope you guys enjoy the video. Thank you guys so much for your likes, your comments, and your subscribes. So let's get started. All right, right off the bat, here's the 30-year yield. You can see that we fell down to a very important layer of support here, and we bounced off of it. Okay, so obviously the 30-year yield falling means that that is very bearish for the NASDAQ. Okay, so the NASDAQ goes down when the 30-year yield also goes down. Okay, and the reason for that is because the NASDAQ growth related stocks have high long-term growth outlook value, right? Because tech stocks grow a lot. Okay, so when the 30-year yield is falling, that means that essentially when the 30-year yield is rising, it means that investors are worried. So they would rather invest in something that is safe and a long-term safe investment. Okay, so that is when the 30-year yield increases. But when the 30-year yield decreases, that means that investors are willing to take more and more risk on the short term. That means that they're willing to invest in shorter term bonds. Okay, this is a very safe investment. But when people are confident in the stock market and the economy, etc., in the short term, then the 10-year yield goes up. Okay, so this 30-year yield puking like this is not good for the NASDAQ. And the NASDAQ has very heavily weighted stocks in it. And because the NASDAQ started to fall and crack so heavily, it also brought down the SPY. And because the SPY broke down, it brought down the rest of the market. Okay, so this is very important that this is going on. Definitely rewatch this portion of the video if you didn't understand what I said. All right, so this is the analysis of the 30-year yield. There's still more room to go to the downside. Let's go ahead and take a look at the NASDAQ. So obviously now you can see, because the 30-year yield was cracking so badly, the NASDAQ was falling 3 days in a row. Okay, we closed below this September 20 low, which is very bearish. But the good sign is that we closed outside of the lower level of the B band. Okay, all right, so here's a chart of the NASDAQ back in February of 2020 when things looked very bad. Okay, so the one time that we closed 2 days in a row. So now imagine this is the NASDAQ here, right? We closed outside of the lower level, and that in and of itself is so unheard of. Usually when we do close outside of the lower level of the B band, like this right here, then essentially what happens is we tend to rally very sharply the next day. But the one time in the most recent history that this did happen this aggressively was back in February of 2020. So that's why on Twitter today I showed the similarities of this move back in 2020 on the SPX, and we caught the bottom last week during that huge fall. Okay, so I mean, currently everything looks really similar. The one mistake that people make is they short into extreme weakness. So when we are very overextended to the lower level outside of the B bands, that's extreme weakness. You don't short into that. You short up here when there's extreme strength. Okay, you don't short when we're fallen so overextended to the downside, because what ends up happening is you get your face ripped off on the rally back. Okay, so this looks very similar to where we are right now back in 2020. So currently we fell very sharply outside of the lower level of the B band. All right, so what I'm saying might end up happening is we could fall down to 357 here tomorrow, or we can, break down and then, fall down even lower. But either way, if that does happen, I'm going to buy into calls, especially if we gap down. I am definitely going to buy into calls expiring October 4th and October 8th on the QQQ and on the IWM. Okay, so yeah, I mean, it looks like we're still going to fall. There's so much more momentum to the downside. The MACD just crossed down below. The RSI is not yet even oversold yet, which means that there's tons more room to the downside. And it looks like this bear flag formation did end up breaking to the downside, which is ridiculous. So now, you know, we could take the potential measured move to the downside, but that would bring us down to approximately like 343, 340. And I mean, yeah, if that does happen, then that could be catastrophic. But I don't think that is too plausible at the moment, because the 10-year yield showed so much strength. Okay, so let's go ahead and take a look at the 10-year yield and the IWM. So the 10-year yield is obviously showing ridiculous amounts of strength. It broke above multiple very important layers of support, resistance, right? And we're just skyrocketing. But now it looks like we've almost become overbought. But I mean, there's no reason to worry too much. So essentially, the 10-year yield going up means that investors and banks are more risk on, which means that they're willing to take shorter term risks because they believe that the overall outlook of the market in the short term is very bullish. And that's a very good sign for the entire stock market. If the 30-year yield is falling, right, and the NASDAQ and the SPY fall in the short term, right, just the equities, they fall in the short term, right, that is not necessarily a bad thing, because literally the bond that measures the short-term strength of the market is skyrocketing. Okay, so in an environment where the short-term bond is skyrocketing, you invest in the IWM, because the IWM is the most heavily correlated to the 10-year yield. When the 10-year yield increases, the IWM increases, but only because the rest of the market really tanked together, along with 30-year yield. That's the reason why the market fell. Otherwise, the IWM, you can see when compared to the NASDAQ or even the SPY, they both look terrible, right? They both fell down below the 22.6% fib level in the SPY. The NASDAQ broke down below the prior support level, but the IWM is still above the 38.2% fib level here. Okay, there's still tons of more room to the downside for the IWM in terms of like where the SPY and the NASDAQ are trading, right? But the IWM, regardless of how weak the SPY and the NASDAQ were, the IWM is still, this is a bull flag formation potentially. All we did was we fell down and consolidated at these two layers of support. Where would have the IWM been a good point for it to stop, right? The rest of the market was tumbling, right? Where would be a great point for the IWM to stop? Right here. Literally, this is the most perfect position for the IWM to stop on today's close. We closed on this trend line and we bounced back and retested this very, very important 50% fib level trend, Fibonacci level at 220.87. Both of those levels held. Okay, so most likely what's going to end up happening now is if the NASDAQ does close open lower and we gap down and we fall down to 357, the IWM is going to end up falling and cracking below 220 most likely, at which point I'm going to buy into calls on both the NASDAQ and the IWM. So 220 is a very, very important level for the IWM. But of course, it really all depends on how much lower the NASDAQ is going to fall. Okay, so there's not much else to say on the IWM currently. Now let's take a look at the SPY. Okay, so the SPY, obviously not as bad as the NASDAQ, but definitely not as good as the IWM. It closed below this very important zone of support. It fell back down and closed below the 23.6% fib level at 434.63. So that is a very key level of resistance now. And the key level of support for tomorrow is going to be 428 to 430. That's going to be a very, very important level of support to hold on the SPY. This uptrend channel is also very important. So if we do find a tap to this channel here, that would be a good potential buy opportunity, especially since then the SPY would be very overextended outside of the lower level, and then the NASDAQ would just have vomited. So in that instance, it would be a much better opportunity to buy into longer term calls, and especially more aggressive on the call side, right? So yeah, I mean, 428 to 430 needs to hold on the SPY. The upper resistance is 430, 463. This also looks like, obviously, it broke the bear flag formation, right? So, yeah, I mean, we just have to watch and monitor the NASDAQ. And depending on how the NASDAQ moves is going to determine how the SPY and the IWM move as well. But currently, what we've deduced is that the IWM is the most bullish because of the most strength in the US 10-year yield, okay? And the NASDAQ is currently the weakest because of the clear apparent weakness in the 30-year yield, okay? And then the SPY is basically stuck in the middle. It's the SP500, and it's really just right in the middle of both of them, right? So there's basically my analysis on the stock market. I shared what I would do here. Basically, if the NASDAQ gaps down below today's lower price, then I'll be buying IWM at the money calls and QQQ at the money calls expiring October 4th and October 8th, okay? So there's the analysis on the stock market. If we do fall lower tomorrow, then that's just an amazing dip buy opportunity because the market would have been so overextended to the downside. So yeah, there's the analysis on the stock market. Let's go ahead and take a look at the crypto market. All right, basically, if the NASDAQ falls below like 357 and it gaps down much lower, etc. tomorrow, right? Then what's gonna most likely happen with Bitcoin is we're going to fall below 40,500 at the very least. And what might end up happening is we might even crack below 40,000. So if that were to end up happening, it would be because of the NASDAQ and the weakness in the stock market, right? But then as the market bounces, then Bitcoin would also potentially bounce off of these support levels here. We could even come back and retest this blue trend line, which was basically the support level that we created back in May when Bitcoin first touched 30,000, okay? So we can even come back and retest this level. So there's a lot of downside still left to go on Bitcoin as well. You can also see this is a bear flag formation also on Bitcoin. Similar to the SPY and the NASDAQ. But yeah, I mean, it really all depends on the stock market currently. Ethereum, very similar, bear flag formation, right? Things are just heavily dependent on Bitcoin. And you can see that Ethereum's MACD crossed above, whereas Bitcoin barely crossed. Okay, so there's still lots of more room to go to the upside on Bitcoin. And I mean, yeah, all eyes on the stock market. And aside from that, there's my analysis for the day. I hope you guys enjoyed it, and I will see you guys tomorrow. Thank you.